Hello, this is Mark from tradinginform.com and welcome to this video on how to calculate Fibonacci retracements automatically using Excel. This is the first of a two video series of videos, and in this video I'm going to look at the Fibonacci sequence, how we use this to calculate retracement levels. I'm going to look at the charts to show how these Fibonacci retracements should look. And then I'm going to show how you can calculate these automatically using Excel. Now in the second video in this sequence, I'm going to look at putting all this together and creating a trading strategy. So Fibonacci numbers, the Fibonacci sequence, the most popular mathematical sequence of numbers out there. Each number is the sum of the two preceding numbers. You can calculate this quite easily using Excel. 0, 1, 1, 2, 3, 5, 8, 13, etc. Each of these numbers, they're quite familiar to most traders. We can also use these numbers to calculate our retracement levels. So I'm going to do this by taking one of the numbers in the sequence. I'm going to divide it by the number 1, 2, 3 places ahead of it in the sequence. Now if I do that again, this time I divide another number by the number 2 places ahead of it in the sequence. I get 38.2%. And finally I'm going to divide this number by the number 1 place ahead of it in the sequence. So we've got there the three key Fibonacci retracement levels. Now we need to add to this the 50% level, which is another commonly used number, and we have probably the four most significant Fibonacci retracement levels. What do they look like on the charts? Well, we have here a upward sloping trend. I'm looking for trades as a trend trader. I'm looking for trades to the upside. Get a Fibonacci retracement, stick it on here, and we can see that in this case we go from a significant low to a significant high, and in this case we have the retracement here, classic retracement. We get exactly, in this case, almost exactly to the 50% level, and then we continue in the direction of the preceding dominant trend. Now this works exactly the same if we're looking at short trends. I can show you here. This time we go from a significant high to a significant low. In this case we're identifying the trend as to the downside. So we can see that the price retraced upwards. This time it retraced very nicely to the 38.2% Fibonacci level before continuing in the original direction of the dominant trend. Now there are a few things that we need to get out of the chart before we can calculate this automatically. Now the first of these is we can see quite easily on our chart what the dominant trend is, particularly when we're doing it in this case when we're looking at prices that have already occurred. But what would we do if we didn't know what the dominant trend is, or we're not sure how to identify it? Well, the way I'm going to demonstrate in this video is using another technical indicator, which is really a statistical tool actually. We've got here standard deviation channels, and what I'm looking at is the central line here. Now the central line is a linear regression line, and linear regression is really a statistical tool to identify what is the best fit straight line through all this data. So my view would be that if the linear regression line is pointing upwards, we're in an uptrend and we should be looking for retracements and trades to the long side. Whereas if I shift this over here, the market had changed by this time. We're looking, the linear regression line is pointing downwards. We should in this case now be looking for trades to the short side. Now, the other significant piece of information that we can identify quickly visually looking at the chart, high, low, but we need to identify what makes these significant. Well, visually, we can see there's a big blank space to the left of this point here, and equally there's quite a big blank space to the left here. So we could say that these are significant highs and lows. When it comes to calculating these in Excel, we need to be specific, and I'll show you how I've done that in this example. So here is my spreadsheet calculating Fibonacci retracements. I should say before I start looking at the formulas that this spreadsheet is available for free to download. If you'd like to have a look at tradinform.com, there's lots of resources and information there particularly about trading analysis using Excel and also the financial markets in general. If you want to click on the link and sign up to the Trade Informed newsletter, you'll get an email and it will show you how you can download this spreadsheet absolutely for free. So, how have I calculated it? Well, I'm using a colour here to identify our long Fibonacci retracements in green and our short ones in red. And also I have the linear regression slope here as well. So, how do we go about starting with the long linear regression analysis? Well, the first thing is that this column, the recent highs, is the most significant. This is the thing that we always need to be aware of. Are we in a long trend? Are we making new highs? We can see we have a long trend here, and yes, we are making new highs. This is almost the very definition of, are we in a trend? Are we making new highs? So the very first if statement is checking whether or not we've made a new low. If we've made a new low, we're arguably not in a trend at all. So we're basically making this recent high a blank. And this is what this first part of the formula says. It says if we've made a new low, then enter a blank here. So if not, we're going to look at what the latest data is saying. And basically we're looking at whether this high here, this most recent high of the immediately preceding period, is greater than the max, which means the highest value of the preceding number of bars. We can set this to whatever we like, but it's basically we've got a recent high. If we have made a new recent high, then we want to enter this value as the new recent high. This is good. We're in a long trade and we made a market that is going higher. We've made a new high. Great. We want to record this value. But if we've not made a new recent high and everything else being equal, we just want to take the previous value. Okay, so lows are also significant because we need to retrace from a low to a high. So we need to have a value here as well. We've got a slightly simpler formula here. And all we're doing here is pretty much the reverse of for the highs. We're looking at the lows column. If I double click in here, we're looking at the lows column. If we've made a new recent low, then we enter the value of this recent low. This is what the formula is saying. And if not, then we take the previous value. Okay, so this third column is actually the value that we're going to use. Now I'm using a variable column here. I've set it to 38.2%, but I could equally set this to 50%, 61.8%, or whatever value we want, but I'm going to set it back to 38.2%. And the second thing that we have to take awareness of is what direction is the linear regression slope. Now I've used a conditional formatting here that will colour this in this pinky red colour if we are sloping downwards. And if I scroll down further, we can see that eventually we start sloping upwards and we go green. So we have a nice visual clue to tell us, should we be looking for trades to the long side or should we be looking for trades to the short side? Okay, now we have a formula that in the formula bar here that may look complicated, and in fact it's very simple. We've got an if and statement, so we're looking for all of these conditions to be true, and all we're saying is that we need a new recent high, we need a new recent low, and we need the linear regression slope to be pointing upwards. If all these are the case, then we calculate in here, we calculate the 38.2% linear Fibonacci retracement level. Exactly, the formula is the high point minus the percentage 38.2% difference between the high and the low. If these conditions aren't true, then we leave this as blank or as 0. So there we have it. This is quite straightforward. We could look at the example of the short ones, but they're exactly the same, but in reverse. If you'd like to download this formula, as I said, just sign up at tradinform.com for the newsletter. And please look out for the new video that I'm going to be posting showing how we can use this information as part of a trading strategy. And for all other information about the financial markets, about using Excel and backtesting using Excel, please go to www.tradinformed.com.